Hello everyone, and welcome back to another technology side quest in electronics, robotics, and communication systems. And for today, Bitcoin. So what exactly is going on with it? Is this market hype? And does the energy consumption actually serve a purpose? Today, I'll try to answer all three, hopefully with minimal techno jargon. The key to remember is that Bitcoin is just as much a method or an algorithm as it is a digital commodity. So rather than its price action, today's video will focus on Bitcoin properties that, in my opinion, do show a genuine paradigm shift in how we transact. I'll also briefly deal with a few Bitcoin myths that seem to be stuck on repeat. If you are independently learning how crypto works, I'm going to assume you're ahead of the curve, so I'll skip the low-hanging fruit, such as Bitcoin being a company, or being a literal coin with a giant B stamped on it. As a quick note, the Bitcoin or BTC blockchain does use the very same SHA-256 algorithm that I like to use to secure my own projects. If you'd like to see that sort of thing in action, feel free to let me know in the comments or contact me on Patreon. For transparency, my past work with SHA-2 is partially why I started following the Bitcoin project and why I hold Bitcoin and other cryptos. That said, this video will be a technical presentation, not a sales pitch, and nothing in it should be construed as financial, investment, or tax advice. Finally, to get through today's video without breaking flow, I'd like to acknowledge my affiliate TorGuard Privacy Protection Services for making these electronics projects possible. TorGuard VPN is the VPN that I use to reduce my exposure to malicious hackers and data collectors. They also feature business VPN and physical VPN routers. You can help your privacy and this blog at the same time if you use the link in the video description to sign up, or use promo code UNBOXING for additional discounts. When we first hear what cryptocurrency is, it's very tempting to compare it to other digital objects, such as files or databases, but this can be counterproductive. For one, its decentralization and fault resistance avoids the negative properties of conventional digital objects and even central bank digital currency. People who are new to Bitcoin often inquire if BTC can be cloned endlessly or destroyed by something like a power outage or an EMP. These questions are natural. Foremost, to have a Bitcoin in the first place, one needs to have a Bitcoin address and a public-private key pair. For BTC, the address works a bit like a bank account, and the key functions more like a PIN number. To prevent duplication, Bitcoins don't move around in the traditional sense, and instead they exist on a public decentralized ledger. The public ledger contains the history of every Bitcoin transaction, giving us an accurate picture of which Bitcoin addresses have Bitcoin and how much. When you receive a Bitcoin, or its smallest unit of measure, the Satoshi, this happened because the transaction was timestamped and then broadcast to every other reachable Bitcoin node. Bitcoin is a permissionless system, meaning that anyone in the world can join in at any time, and there are entire websites dedicated just to displaying Bitcoin transactions in real time. Making these messages public is part of Bitcoin's fault-resistant strategy called state machine replication, or simply state replication. In fact, the technique has been around for decades and is well documented. Some people accused Bitcoin of fostering money laundering, but to put it bluntly, this is mostly a hot take from people who have not researched this feature. When these transactions are grouped into blocks, they will not be accepted by other nodes unless those nodes can verify that the block is cryptographically secure, that the coins originated from a previous block reward, and that the funds have not already been spent. These nodes operate independently across the globe, and the setup is so robust that even if tricksters on the opposite ends of the planet tried to spend the same Bitcoin from the same address at the same time, the remaining nodes would eventually catch on to this, and only one transaction would be honored. From this, we can say that Bitcoin's blockchain prevents the double spend. So, can Bitcoin vanish or be destroyed? You may have heard true stories in the news about people losing entire fortunes. However, this tends to happen one of two ways. A, the rightful owner lost access to their private key, or a bad actor became aware of what the key was and used that information to steal the funds. To recap, we have a decentralized ledger to prevent duplication, we have state replication, which keeps the ledgers globally consistent, cryptography, more on this later, and consensus mechanisms to prevent double spending, at least if most nodes are legitimate. So why all the energy consumption? If you know that Bitcoin addresses are uniquely assigned, you might say, well, that's great, but so are telephone numbers. If phone numbers can be made up out of thin air, then why can't we just make up more Bitcoin? This is where the energy consumption comes into play. To see how, it's crucial to understand that a Bitcoin isn't just a digital ledger entry, it also represents an unpredictable relationship between the digital ledger and the SHA-256 signature that it will produce. So rather than explain SHA-256, I've got a demonstration here in GNU Octave, and we can see that no matter what information SHA-256 receives, it will scramble those data and then return a hash that is always 256 bits long. Unlike encryption, which is meant to be reversible, SHA-256 has no inverse function, meaning I have no way of recovering the original message from the hash. SHA-256 also causes a sort of butterfly effect, where even the slightest alteration or corruption will change the hash in unpredictable ways. If we feed it Bitcoin transactions, we see the same effect. The Bitcoin network of decentralized nodes will not accept blocks of transactions unless the block's hash contains a high number of leading zeros. Ideally, a Bitcoin miner wants their block to produce an acceptable hash on the first try, but as of 2021, no one knows how to do that. And the only way to generate an acceptable hash and collect the block reward is to make trial and error adjustments to a pre-designated field called the nonce, also called a nonce or number used once. This also has the benefit of making sure that every node has to play by the same set of rules without the need for any type of a master node or central authority. This is in contrast to centralized fiat currencies, which, at least in theory, creates a situation where financial authorities could use their financial acumen to game the system. Cantillon effect would be one example. In summary, it restricts Bitcoin's rate of emission to a factor that no human can directly control. Random miners simply issue random guesses until they find an acceptable hash. Mathematically, the numerical relationship between the hash and the block that produced it existed the whole time, but had to be discovered using exploration. This is akin to how mineral mining is only rewarded at the cost of time and energy. The software running Bitcoin nodes always considers the longest Bitcoin blockchain it can find to be the most valid. This is because it has the greatest proof of work. Furthermore, a Bitcoin hash is ultimately an effect caused by real-world transactions. Future hashes, like the blocks that produce them, will be controlled by future transactions. So without a time machine, no miner can skip ahead to work on future blocks. In short, Bitcoin's block rewards always come at the high cost of time and energy, and even its harshest critics can agree it uses a lot of energy. Bear in mind that once those transactions are confirmed, they are effectively permanent. This is in contrast to credit cards, which seem fast at the surface, but actually take several days and intermediaries to clear. Additionally, using methods like credit cards, debit cards, checks, and bank wires requires the exchange of secret information that a third party could misuse to drain the buyer's account. For checks, this would be your bank account and routing number, or your credit card number and confirmation code. Bitcoin is a bit different because in order to exchange it, it is actually the recipient who exchanges their public key, and the private key, which is secret information, is not exposed like conventional transactions. Finally, there is still the controversy over its energy consumption. As of this recording, the global energy use is estimated to be somewhere near 139 terawatt hours on an annual basis. This is pretty much comparable to the amount of energy used by places like Sweden, Malaysia, and Egypt. And this has some critics saying that Bitcoin should be stopped outright. Fair warning, Nigeria tried this recently, and it actually made Bitcoin locally more valuable. First off, let's pause for a moment and use our critical thinking. If this is the energy that Bitcoin uses, then how much energy does traditional finance use? We're talking not just bank branches, but also ATM machines and the factories that produce them, currency mints, mining operations, presses for publications, security services, and transportation. I'm pretty sure the answer isn't zero. ARK Investments had the same curiosity and discovered that Bitcoin is actually surprisingly green compared to legacy finance. And apparently Bitcoin miners have mostly made the switch to renewable energy and a technique called cogeneration, which uses waste heat for productive purposes. Even if you're assuming exponential growth, the argument for renewable energy, in my opinion, is stronger than the case against Bitcoin. Finally, there are cryptocurrencies using the so-called proof-of-stake model, and besides being energy lean, proof-of-stake often pays out dividends, which is effectively passive income. But let me know what you think. If you find this sort of thing useful, be sure to like and share the video. This helps me figure out what people are interested in, and it helps the channel in general. The monthly poll for April 2021 wants to know if you've been affected by the global parts shortage. It's certainly affected my operation here, and I would be really surprised if the answer is no. Stay posted for the next project in electronics, robotics, and communication systems, and as always, have a great day.